Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report that's about as exciting as watching paint dry. Well, almost. We are looking at IGTA Merger Sub Limited, a company that's basically waiting for a business deal to happen. Think of it as a placeholder in a game of corporate musical chairs. The company is getting ready to change its name, but really all that is happening is waiting. In today's filing, we'll break down their waiting game, what little money they're spending, and whether they can actually stay in the game. Before we get started, if you like corporate deep dives, don't forget to subscribe. Also, check out our Discord channel in the description below to talk about stocks and companies. We are looking at their quarterly report, a Form 10Q, for the period ending in March. These reports happen 3 times a year and give updates on how a company is doing between the bigger annual reports. First off, we need to stress that these numbers are not checked by outside auditors. It's the company's own view of their finances for the quarter that analysts look at. Now for the fun part, the numbers. But for a company whose purpose is waiting around, those numbers aren't that pretty. Essentially, there isn't total liabilities or deficit. The company has virtually no activity. Scroll Cotton's statements of a patient's call. Let's scroll down to the condensed statements of operations. For the 3 months ended in March of this year, their loss per share was about 117. And last year, it was only about $32. This basically means they continue to lose money. Scroll on order condensed statements, pools of cash, flow, scroll. To next, let's look at where their money comes from and goes by scrolling to the cash flow section. During the quarter of March of this year, the company saw a net cash used in operating activities. In basic terms, spending more money than they made, which was around $105 last year, was almost the same amount. So it is consistent, but it still is not great. The company can still continue as their parent company is giving the firm loans with a net cash provided by financing activities of, what a surprise, $5,605. Okay, so what is this company anyway? Let's scroll to their organization and business background where they give a bit more detail. IGTA Merger Sub Limited, it was formed last year, is basically waiting to merge with another company. It is a shell or blank check company, meaning it was created to find a business to merge with and bring public. The parent company is Inception Growth Acquisition Limited. There is a plan to combine with Agile Algo Holdings, a British Virgin Islands company. They are still moving forward with a business combination set to happen in 2 steps. There have been a bunch of amendments or changes to the deal. The most recent change extended the deadline, which is common in deals like this. Now, here is where things get a little concerning, where they mention going concern uncertainties. What that really means is they are not sure if they will have the funds to continue operations. As an exempted British Virgin Islands company, they don't have to pay income taxes, which saves them some money. The shareholders are in the hole, so this explains more about how that works. This company is allowed to issue a huge 500 million shares. Of course, only a small amount currently exists. Now, let's see who is making money off this other than the shareholders. As of the quarter in March, the company had about 19,350 40/40 due to the parent company. That is up from December, so expenses are rising. The chief financial officer is in charge of evaluating the company's performance. Since there is only one real segment, it makes it very easy. Finally, let's briefly touch on subsequent events. Subsequent events just means what happened after the quarter ended. In this case, it is another deadline extension. Now for the summary. Well, the company hopes that it will merge. Note they also have risks and factors. If you read the filings on Form S4 initially, there are risks that may be present. All in all, this report paints a picture of IGTA as a company stuck in neutral. They are burning a little bit of cash and mostly depending on their parent company to keep going. The biggest strengths of IGTA is that the leadership has seemingly been in this position for some time, and they are in a holding pattern as they see what happens. One of the company's biggest weaknesses is that this deal falls apart, and there is not another one in the pipeline, so it becomes worthless. It is hard to have a specific target price based on these conditions. This is because there is no active business or growth in sight, and the price depends on the merger. Alright, that's our breakdown of IGTA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord channel in the description. Thanks for watching and see you next time.